Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Gunn. Jumping into the charts on this December 7th. So basically it is another down day for the S&P, but just a slight down day you can see here. The importance of today's action is the fact that we actually have not got a confirmation of a breakdown below this neckline. So that is a short-term positive if you are a bull in this market. I'm nowhere close to being bullish, but you have to respect the price action that we have not confirmed a breakdown from this level. So there's always the potential that we could float all the way back up to this 200 daily moving average or this yellow trend line before starting the next down leg. And the reason why I think that may happen is just due to the fact that the volume we're seeing is very light. And there's not really much sell pressure or buying pressure coming into fruition yet. But anything can change on a dime. The markets are very brittle. They are vulnerable. They're more vulnerable to a breakdown than they are to a break up. So let's just keep that in mind. If we get that secondary confirmation, we likely go test this 374 gap fill. You may get a little bit of an intraday bounce here, but considering you're consolidating right above this key support. So this is the interesting thing about price actions. You have a big support level here, and you also have a secondary support level over here. So these two support levels are very big in nature, but due to the fact that now you're looked to be consolidating, if we flip to the hourly chart, you can see what I mean about this sideways consolidation. So you've come down, and now you're putting in this bear flag pattern on the hourly basis. So usually these supports would be strong, but considering you're doing sideways price action before heading into that price makes them a lot weaker. So I wouldn't be waiting for this level for a good bounce because you're just consolidating right above it. You may get an intraday bounce over here, but again, it's not very strong, that support level. So let's just flip back to the daily to see what could happen. I still think we could consolidate sideways, maybe float up, touch that 200-day moving average again before rolling over. But again, we're on the brink of collapse. If you get that confirmation, the probabilities significantly sway in favor of the downside. Let's take a look at the XLE. XLE has had another down day, but again, you're very close to that support level. If we take a look at the USO, actually we'll flip to the WTI because that's what we've been doing our analysis on. But the WTI has made a new low. Look at this beautiful 4-bar surge to a low. You took out that bottoming tail. Now the big question is, can we confirm below it tomorrow? That is going to be a massive level. But arguably this oil chart is looking exceptionally bearish in my opinion. I do think it's more than likely we get that flush down to 66 sooner rather than later, just due to the fact that we've now broken out of this parallel channel. And when you think about how powerful this channel has been, basically since we started breaking out with the war rumors and going into the Ukraine-Russia conflict, oil has been trading downwards and lower ever since, and we've officially pierced and broken that channel. Keep in mind we had a bounce here off that channel, we had a bounce here, but notice how every time you've bounced off of that channel, so over here you had a good rally, over here you had a good rally, the rallies have been getting smaller and less powerful in nature, which is why it's very likely that we see continued downside strength. You're clearly making a series of lower lows, and that's just honestly the trend, and you can't really fight it at this point in time. Natural gas has had a little bit of a bounce, so that's why the energy sector isn't down as much as it probably should have been. But if we look at the natural gas chart, you can see it's bounced off that triple bottom zone. You're still under these two big resistance trend lines. So there is the potential that you go fill this gap before the next down leg starts rolling over. But in my opinion, natural gas is cooked. I think that this price action definitely shows that we're going to be making lower lows on the chart in the near future. And probably in 2023, I say we're going to see within the next couple months natural gas all the way down to 350 here. So that's a pretty big decline that could take place, but I certainly think it's more likely than not. So in the down market, the standout is gold. Gold's seeing a little bit of a positive day today, but it's still inside of this big reversal candle stuck under the 200. I still have it priced in, gold testing the 1722. And if we actually look at the gold futures chart, which is why it's important to look at many different assets, across the sector. You know, you can look at WTI, USO, there's many different tickers, but often when you navigate through all the same asset class, but all the different tickers, you notice different patterns and different setups in each. So what I'm noticing on the gold futures chart, and a lot of international and traders trade the futures all night long, but what I'm noticing is you have a big gap fill here at 1740, and then it also is very vulnerable to a retrace all the way back to this breakout trend line. I think 1681 or lower is going to be an impeccable buy if for some reason gold flushes into that level. Silver also had a pretty big update today in a down market, so it's clearly showing good relative strength. One of the reasons why silver is bouncing, you can see it's had this initial trend line breakout. You've retraced and bounced. I don't think this trend line is going to hold. I think you need a little bit of a bigger retrace in order for this pattern to continue to move to the upside. Let's take a look at the DXY. The DXY is still very oversold in my opinion. It is down today, so considering the markets couldn't catch a bid on a down dollar is certainly a little bit of a red flag, because typically the markets embrace when the dollar weakens, but that's not what we're seeing. The dollar is still stuck under that 200. I still have it priced in that we get to 106.85 at the minimum. So it's another, $1.50 and change, which should put some additional downside pressure on the overall markets. Let's take a look at the 2-year yield. So we exited our yield play today, not the 2-year, but the 2-year yield is still hanging on by a thread with this topping formation pattern. It's still, we haven't really got confirmation of that breakdown because you're still within inside of this wedge. But nonetheless, let's look at the US 20-year yield. So if we take a look at the 20-year yield, you can see that we're actually basically now buying yields via the TMV. And one of the reasons I started accumulating this position is because you've had a beautiful 618 retrace of this whole up move. Basically from this low to this high, you've now done a 618. And you're into massive support. You can see this pivot and this pivot pretty much in a straight shot down with no bounces. So I think that considering you've had 1, 2, 3, 4, 5 weeks of straight downside and you're into a massive support level, yes, you can probably go a little bit lower, maybe to the 200 daily moving average, but this is the support zone for yields, and which is why I think the markets are potentially going to be caught off guard in a little bit of more of a sell-off day, because I do think yields are going to potentially spike. Maybe it's on PPI, maybe it's on CPI. I don't really know what's going to be the catalyst or causation of this, but I do think that the technicals are showing that we're going to have a little bit of a technical bounce in yields. And there is a possibility in yields that we go all the way back up to the 4.15% mark if we get a meaningful technical bounce. So we bought the TMV, which is basically a triple of the yield, so it's a little more volatile, but nonetheless we're accumulating a position. We did get a pierce of the 200 daily moving average. Typically the 200 daily moving average provides a bounce in most assets, and I do think that this is probably also going to be the case once we start to see the yield spike back up. Really, that's about it for today. We were pretty active. We closed our UBT for a lovely 10.6%. So if we take a look at our UBT play, basically we sold it here. One of the reasons we sold is you're into this resistance point here, a gap fill, and you've had a pretty extended move on the UBT chart. We also covered our Pinterest trade, so awesome job there. Pins netted us a beautiful gain. You can see it's right off of that level. One of the reasons I covered it, simply you've hit support in this parallel channel. Beautiful double-digit gain for us. We also covered our Tesla short. So we've been banking money on Tesla left, right, and center. Beautiful 13%. You can see that was an easy trade setup where it retraced back to this neckline of this weekly head and shoulders, and then you've pulled off right onto that level. So again, we're banking tons and tons of winners. We also picked up a beautiful new trades. We shorted X steel, so US steel, and look at this beautiful reversal signal. Daily topping tail in an extended move. As the economy is weakening, I think steel is going to be a major, it's going to have major headwinds as the economy deteriorates. We also picked up a little bit of Zoom. So despite me being bearish on this market, I wanted to get a little bit of long exposure just due to the fact that if these markets get a bounce, we're likely to see it. One of the reasons I picked up Zoom, if we go to the weekly chart, you can see that this was your original channel that you were trading in before you broke out to the upside on this quantitative easing. And you can see you've pretty much been chopping in that channel ever since, and you're now at the low point of that channel, and you're also at this triple bottom upsloping trend line in an oversold condition. So I think Zoom could easily have a bounce back up to 80, which would put us nicely in the money for on that trade. And the beautiful thing about Zoom is why I like this is that you're still inside of this bullish up move pattern. Yes, you've had a severe drop all the way from 81 to basically now sub or $70, but if you have not taken out this wick low, and honestly, if we just get a daily close below this low, then we can stop out for a small loss. We also picked up Genrac. GenRC is another one that's been bludgeoned and beaten down. I actually like this type of pattern where you have a consistent downtrend, but it's a downsloping channel instead of an upsloping channel. What this shows me is that there's still sellers remaining, but now you're starting to get into the picture where the sell side pressure is actually starting to weaken, in my opinion. And this stock has just been completely bludgeoned. And when you look at the support levels that we're now into, you can see we just hit this pivot here around 90. You also have some support here, but you're approaching those COVID lows pretty quickly. But I like this chart for a bounce. Yes, we could go a little bit lower, but I do think these are the levels that we start accumulating and taking shots at. And if you look at this type of price action, I mean, it's just been completely demolished without any meaningful retrace on this weekly chart. We also basically bought KALV. We've traded this one before, but I do like this bullish bull flag pattern. Typically, I won't buy stocks ahead of earnings, but with this bullish pattern in play and the company reporting good earnings, and considering it had this massive gap down already into support, I do like KALV Pharmaceuticals for a potential pop. Now this one's a very high volatile flyer, so we could see a drop on this for sure. There absolutely is that, but it's a small percentage of our portfolio, and nonetheless this consolidation pattern is very bullish and pointing to a more likely move to the upside. So if the company reports good news, which there absolutely could be, and the interesting thing is when you reported earnings, it was pretty decent earnings, but it was just a mid forward guidance downgrade and a little bit of a bad news on one of their drugs that sent the stock flying. But since that's been priced out, all the weak hands are in, it looks like many people are accumulating and looking for a potential pop up. Where do I see this potentially popping to? I think gap window is a good area, 759, or even this pivot low around 809 or 805 and change. So that's kind of my expectations for that. We also shorted CI. We're starting to accumulate a position. One of the reasons I like this is because you just had a massive sell-off on CI on good earnings. Yes, it has been bought back up, but you have not confirmed above this weekly reversal signal. And not only was this a weekly reversal signal, but it was a weekly engulfing signal. So very, very bearish. I don't think you're going to get weekly confirmation above this. I do think it's only a matter of time before the stock sees more downside. And when you think about what levels we're running into now, we have this beautiful, beautiful parallel channel going back from your pre-COVID high to your COVID low. You've hit it at the low here, you've hit it at the high, low again, and you're almost into that level. So we will keep accumulating a short position on Cigna Corporation. And even if we get above this orange trend line, you do have a secondary resistance level, which is basically a trend line going all the way back to 2007, connecting to 2015, 2018, and you're very, very close to that level if you were to peek through. So tons of resistance up ahead. This chart favors more of a breakdown than a breakup, considering the market dynamics and conditions. There was another one that we shorted as well, NVS. So I'm just touching base on all the trades. Look at this extension move on Novartis. You're into this beautiful kind of double top zone. You filled this technical gap. Could the stock float a little bit higher? It absolutely could go to double top, but I have no problem accumulating an even larger position just due to how extended this stock is. Whenever you see these type of parabolic moves, they're never sustained. I have been trading now for 10 years, and I see so many charts like this, it just makes my mouth water for opportunity. Yes, it's a good company. Yes, they're generating cash flow and making investors money, but in the market dynamics, typically stocks that make a move like this don't hold up. We saw it over here, parabolic move, and then look what happened. Parabolic move, look what happened. So these type of moves, parabolic move, and then look what happened, are not sustainable. You can see that over time, this chart has many choppy periods, and it's just a matter of time before we start a big down leg in Noveris and this before the stock comes back to its equilibrium. If we take a look at the weekly chart, what is this? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row into resistance. You cannot ask for a better short setup in my opinion. Even if we get a minimal pullback back down to this $85, that would net us a beautiful, beautiful gain nonetheless. Let me just touch base on Bitcoin since we have not seen what that is doing. So Bitcoin daily chart is still holding this bull flag, but you can see that it is seeing some sell side pressure today. So the big level is this yellow trend line. If it breaks this yellow trend line, you have a secondary yellow trend line over here, which could act as support, but you really don't want to go lower than these two levels. So I'm still in the camp that Bitcoin could potentially break up. Basically what I'm going to be doing is I'm going to be moving a stop loss right just before our short here so that we don't really lose money in the trade in the event that Bitcoin does pop to the upside. Now, if Bitcoin pops to the upside, will I look to re-short it? Absolutely. If Bitcoin breaks out of this bull flag pattern, I think that the upside that we can see in Bitcoin is a retrace back to this. If it gets to that neckline, you can see there, you could get a retrace to the top of this channel. But both areas would be a great shorting opportunity if it goes right into that level in a big straight rate of change move. Really, that's about it for today's video. Hope all this analysis helps. Continue banking winners. I know my personal swing trade and day trade account just hit a new high, as long as some of my clients. So if you've been following all of our trade signals and alerts, congratulations to you, because we have been printing profits yet again. There was a little bit of a lull period here, but the money is made on the turn in the market, and I do think we're experiencing the next turn in the market, or we're absolutely very close to it, which is why we have been making money and hitting new highs. Now we're still net short, but we picked up some longs just in the event that the markets do pop, that we have a little bit of long exposure to insulate our shorts. But nonetheless, I feel that we are in a well-suited position. We're cash heavy, we are short, we're net short, and honestly, we have some long exposure, but we have slowly been pairing shorts off of the table the last 2 days in the event that the markets do get a little bit of a pop. But nonetheless, my overall bias is still to the downside on the S&P 500, at least to this gap fill down.